We've all done it, right? That super quick, satisfying tap of your phone or your card to pay for something. It feels like instant magic. But in that split second, there's this incredible, secret journey happening, all designed to keep your money safe.
So, what is actually going on under the hood? How does your money get from your bank to the store so ridiculously fast and, more importantly, so securely? Well, today we're going to pull back the curtain and take a look at the secret life of a digital transaction. To get what's happening, you first have to understand the problem. And the problem is that long number on your card, your primary account number or PAN. Think of it like a skeleton key. If a thief gets their hands on it, they can try to open a lot of doors. But what if instead of handing over that master key every single time, you used a temporary, one-time use valet key? Well, that's the genius idea behind a technology called tokenization.
So how do we get this awesome digital valet key? It all starts with this one-time setup that happens when you first add your card to a digital wallet, like Apple Pay or Google Pay. Let's break down exactly how your card gets its own personal, super secure token.
It all happens in 5 really quick, really secure steps. First, you punch in your card details. Then, your wallet pings the card network. We're talking Visa, MasterCard. They're also known as token service providers, or TSPs, and asks for a token. The TSP creates a totally unique but still inactive token and locks it away in its digital vault. Then, your bank jumps in to make sure it's actually you, maybe by sending you one of those one-time passcodes. Once you give the thumbs up, boom, the token is activated and it's securely linked just to your specific device.
Now, okay, this diagram might look a little complicated, but it's really just the technical roadmap of the process we just walked through. You can see your wallet over on the left kicking things off, the request zips through the TSP, goes over to your bank for that critical "is it you" check, and then the confirmation comes all the way back to light up that token on your phone. It's basically a chain of trust being built in just a few seconds.
Okay, so our secure valet key is created, it's in our wallet, and it's ready to go. Now let's follow it on its journey when you actually go to tap and pay for something. This is where all that setup really pays off. But before we trace the path, let's quickly meet the 4 main players in this little drama. You've got the merchant, that's the store. The acquirer, that's the store's bank. The token service provider, again, think Visa or MasterCard, who's in charge of the tokens. And finally, the issuer, which is just your bank, the one that gave you the card. So this flowchart shows everything in action. When you tap your phone, you're sending the token, not your actual card number. The merchant's terminal grabs that token and passes it to their bank, the acquirer. The acquirer sends it along to the TSP. Now, the TSP is the only one who can look up your real card number, which it then passes securely to your bank for approval. Once your bank gives the okay, that approval travels back down the same chain. But here's where the most important security step of all happens.
This is the absolute core of the whole system. It's a process called de-tokenization. The TSP swaps the token for your real card number for just a millisecond, long enough for your bank to see it and approve the charge. Then, on the way back, it swaps the token right back in. And the result? The merchant never sees or stores your actual card number. It stays completely locked away, totally out of sight.
You can see this system is a massive leap forward. But how does it really compare to other security methods we've all heard of, like encryption? Let's take a look.
The difference is actually pretty simple, but it's profound. Encryption is like scrambling your card number into a secret code. If a hacker steals the coded message and they somehow find the key, they can unscramble it. But tokenization doesn't just scramble your number, it replaces it completely with a substitute that has zero mathematical link to the original. So if a thief steals the token, well, it's totally useless to them. It's like stealing a car key that doesn't fit any car in the world.
And when you look at the big picture, you can see where tokenization really shines. I mean, encryption has risks if that key gets stolen. And we've all been annoyed by 3D Secure, right? That extra step that sometimes makes you just give up on a purchase. Tokenization provides incredibly powerful security that just works in the background. It's seamless. Sure, it relies on that central token service provider, but for us, the user, it creates a way better, way safer experience.
So we've seen how it all works, and it's pretty clever. But what's the actual real-world impact? I mean, this isn't just a cool piece of technology. It is fundamentally changing how secure and efficient payments are for every single one of us.
Check out this number. According to Visa, merchants who start using tokenization see a 25% drop in online or card-not-present fraud. Just by taking the real card number out of the picture, a quarter of the risk just vanishes.
And businesses are paying attention.
Big time. In 2023, a staggering 40% of all digital payments around the world were tokenized. That's not just a trend, that's a massive shift. It shows you just how much trust the entire financial world has put into this technology.
And it's not just about security, it's also about saving money. Because merchants aren't storing our sensitive card data anymore, their whole compliance headache gets way smaller, leading to an average savings of 35% on audit costs. It's a true win-win. Way better security for us and lower costs for them.
So, tokenization has completely revolutionized payment security. It's replaced our most sensitive financial data with these secure, disposable stand-ins, and it's made our daily lives safer and way smoother. Which leads to one final, really interesting question. If we can so effectively tokenize our payment information, what other sensitive data in our digital lives is going to be next?